All right, sorry about that again. So we're set up. So last chapter, we covered job order costing systems. And so in this chapter, we're going to talk about process costing. And so process costing, as we mentioned earlier, or I mentioned earlier, is usually for jobs where a company produces a whole bunch of the same product, right? So it doesn't make sense to start trying to track things by jobs. Instead, what you do is you find average costs, over huge amounts or huge runs of production. Anyway, so let's see. More technical problems. All right. So again, this is just kind of comparing them. We won't linger on it. I just kind of explained it. The thing that's going to be different is we're going to separate our work in process inventory accounts for each process or department instead of job cost sheets. And we're going to use what's called a production cost report for each department to figure out our costs, okay? Also, under a job order costing system, we tend to deal with our costs when we complete each job, whereas in a process costing system, it tends to be periodic, meaning monthly or quarterly or annually, depending on the size of the company and the needs of the accounting, whatever. So it's based on accounting period. All right. We have the same basic concept. In other words, we're using it for the same ideas: control costs, set selling prices, and we're still going to use the same inventory accounts, work in process, finished goods, raw materials as well, and then cost of goods sold. But this process will help us to be able to calculate our balances for each of those work in process, finished goods, and then cost of goods sold. All right. So panel A up there above, that is what we just got done with, job order costing. So materials, labor, overhead flow into each job, then the jobs flow into finished goods inventory, and then whatever we sell goes into our cost of goods sold. Whereas under process costing, we have direct materials, direct labor, and manufacturing overhead going into each of the departments along the process, okay? And I'll give you an example in a minute. So this example is a company called Cheerful Colors. I don't know what they make. Something cheerful and colorful, I'm assuming. But they have direct materials, direct labor, and overhead that go into their mixing department. And then the work in process from mixing flows into the molding department, where they add more materials, more labor, and more overhead to it. And then it flows into the packaging department, where they add more materials, more overhead, more labor, more overhead, and then into finished goods. And then when you sell it, it becomes cost of goods sold. Okay. So this wins the obvious award, but the total costs that you incur during the period in Department 1 are going to have to equal any cost you transfer to Department 2 at the end of the period, plus any costs that are remaining in Department 1 at the end of the period. Now, even though it's obvious that any costs you incur here have to either transfer on to the next one or they remain here, it's important, okay? Because it's sort of the way all of this flows. So just remember it, that total costs incurred during a period in one department, and Department 1, I mean, will equal the cost transfer to Department 2 plus anything that remains in Department 1. It's hard to remember it because you have no context for it, right? So I'll explain this concept to you and you'll be like, yeah, and then it's always when people try to like give me directions to a place. So then you drive down to this and then you turn left and then you drive to that and you turn right, and you're like, that's easy when I'm seeing the thing, but like when I have to imagine it ahead, I'm like, now I have a phone, right? So I'm like, just give me the freaking address and I'll plug it in there. You ever seen those videos where people like drive into a lake because they're following their GPS? Have you ever actually done something like that? You just like blindly follow your GPS and then be like you're ignoring all of the cues of your eyes and just listening to the GPS. Anyway, all right. So a concept that gets introduced in this chapter that is a little confusing is the equivalent units of production, or EUP. Okay. The equivalent units of production is expressed in it's confusing because what we're doing is saying at the end of a period, we're going to have some partially completed units in any given part of the process or any given department. But they use equivalent units of production to express those in fully completed units. So if you had 1,000 units in process that were 25% complete, you would express those as 250 equivalent units of production. And it gets a little confusing, especially because they can be partially complete as it relates to materials being put into them, and they can be partially complete as it relates to labor and overhead being put into them. And so then you can have these two different numbers. So I'm going to show you some examples, but I'm just kind of warning you, this is the part where this chapter gets a little confusing until you get used to it, because it's a little confusing. All right. So when we use a product production costing, we use a term called conversion costs, which we introduced earlier in the course. But the idea is that many manufacturing systems in today's world have quite a bit less direct labor costs than they used to. Why? Because we've automated so many things, right? We have things that roll down production lines and get auto welded and all sorts of stuff. So to simplify the accounting, we combine direct labor with manufacturing overhead, and we call that conversion costs. Okay. So now instead of worrying about direct materials, direct labor, and manufacturing overhead, we just say direct materials and conversion costs, or the cost of converting the materials, the raw material, into the finished good. Okay. So that's going to come up in here. All right. So here's a company that makes puzzles. So they have two processes. One's called the assembly process. The other's called the cutting process. So if we're going to be process oriented, we're going to say at the assembly line, some direct materials, which will be cardboard, picture, you put a picture on it, and glue. To glue, I'm assuming the picture onto the cardboard. The direct labor, workers operating a pressing machine that's going to cut it into the pieces. And then manufacturing overhead, the maintenance and depreciation on the pressing machines. When they get done with that, the partially completed puzzles will go, actually, so the press must just be to press the picture on and make sure it gets adhered really well to the cardboard. Because the second process is the cutting process. The only direct material at that space is the box. The direct labor is workers operating cutting machines, and the overhead is going to be the depreciation on the cutting machines. So that's their process. Yeah. We'll get to it. Yeah, we'll get to it. Okay. So this is where we're going to get to it. So I'm going to show you how to do a production cost report. Okay. So it shows the calculations for the physical flow of the products. It will summarize the flow in units, and then we'll compute the output in terms of equivalent units of production. Then we'll compute the cost per equivalent unit of production, and then assign costs to units completed and units in process. So these 4 steps are what you're going to be using in this chapter, and it's a little confusing until you see it done. Okay. All right. These are 2 terms that they're going to use in this production report. The first term is to account for. So that's going to be the amount in process at the beginning of the period, plus any amount we've started or added during the period. And then accounted for is going to be any amount that's still in process, plus anything that's been completed and moved out. Do you remember how I said the obvious slide, that what you have plus what you what you have in one area is going to have to equal what you move to the next area plus anything that remains. That's where this concept's going to come into play. Okay. All right. So let's just look at a production cost report. So step one is to track the physical flow of units. Okay. So here, this is our oh, they're called Puzzle Me. Clever. Okay. So this is our puzzle company. So we'll see that at the beginning of the period, so here, so your production cost report is always laid out like this: units to account for, and then units accounted for. And under to account for, it's always beginning work in process plus started into production. That adds up to our total units to account for. And then accounted for always starts with completed and transferred out plus any ending work in process. Okay, that will add up to our total units accounted for. And our to account for has to equal our accounted for. Okay. So step one, the physical flow of units. They had 0 in process. They started working on 50,000 of them. Of those 50,000, this is the assembly department, by the way. We completed and transferred out 40,000 of them and had 10,000 still in process at the end of the period. Okay. Step two is to figure out our equivalent units of production. So equivalent units of production mean of what we've accounted for. It's a little confusing, but of what we've accounted for, how much in equivalent units of production of them are actually complete. Okay. So the completed and transferred out are always the same as the whole units. Why? Because the equivalent unit of a whole unit is a whole unit. Okay. So if they've transferred them out, it means they're done. So there's no worry about calculating an equivalent unit of production for the units that are completed and transferred out. But for anything that's still in process, what we're really asking is those units that are in process, how much of it is in process? How far along is it in process? Okay. And so I don't know why or like who came up with this. Instead of say just expressing it in percentages, which I think would be easier, like we're 50% complete on this process, instead they express it in equivalent units of production. In the problem, it's going to tell you something like as a percentage. It's going to say of the 10,000 units still in process, they are 100% complete as it relates to direct materials and 25% complete as it relates to conversion costs. I just think that would be a more convenient way to just say it. So then you have to say, okay, 100% of the 10,000 is 10,000 equivalent units with respect to direct materials, and 25% complete with respect to conversion costs means 25% of the 10,000, 2,500 equivalent units there. So that's equivalent units of production. After we've dealt with units, we have to move on to costs. And this is where you start to see, okay, this is why they do the equivalent units. Okay, I still think percentages would probably be easier, but yeah, sometimes you come into a system and you're like, I just have to live within this system. Someone else created this system and this is the way they do it. And you can't ever move into a new job and try to change things in the first week. That just makes everybody mad, right? At my last job, we did it this way. Anybody ever work with that person? We did it this way here. When I worked at Pizza Hut, well, you're at Little Caesars now, sucker. Right? Or whatever. But all right. Those Little Caesars people get territorial. Okay. Yeah, super aggressive. So I ordered 3 pizzas from Little Caesars last night on the little app because the pizza portal is the best thing on earth because I can get pizzas with 0 human interaction. And I went in there and they weren't in the portal. And the guy working there was like, hey, sorry, man. He was like super chill about it. And he's like, some stuff got stuck in our oven and then your pizza's like backed up in the oven and they burnt. And I'm thinking, what could possibly get stuck in the oven? Like what? Like, was it like a body? Like, what was it? You know? Apparently, it was a pizza that had risen too much, and it rose so high that it like wedged in there. I had to wait 5 freaking minutes on top of my time. He didn't even offer me any crazy bread or anything. I should have demanded my rights. Yeah, exactly. Yeah, it was an Icarus pizza. It flew too close to the sun, and that was All right, thank you for the Greek reference. Okay, step 3 is costs. Okay, so on costs, again, we have our costs to account for. In this case, there's no transferred in, right? Because we had 0 beginning and we didn't transfer any in because this is the first step of the process. We have our direct materials, our conversion costs, and that gives us our total costs. Then what we do is we can take our direct material costs, 140,000, divide it by our equivalent units, and that gives us a cost per equivalent unit. We can do the same thing with our conversion costs, and now we see why it's good to have units here, because we can say it was 68,000 and we had 42,500 equivalent units of production with respect to conversion costs. That gives me a cost per equivalent unit, and I add them up and I can have a total cost per equivalent unit of production. Okay? So it really is that simple. You're just taking your cost and dividing it by the equivalent units of production for each, for direct materials and for conversion, and then you add those together to get a total cost. And then step 4 is our costs accounted for. And here what we're doing is saying, we have, where is it at? So we have our units accounted for. So with respect to direct materials, we have 40,000 completed and transferred out. I can take that 40,000 times $2.80 per unit, and that says $112,000 worth of direct materials costs have been completed and transferred out. 10,000 times the $2.80 gives me $28,000 worth of costs are still in process. I do the same process for my conversion costs, and then so now I'm fully accounting for my total costs. So this whole process lets me come up with an equivalent cost, or cost per equivalent unit, which is really important to me because it helps me understand, it helps me understand what it's costing me per unit to produce it, so I can base my pricing on that. I can base my marketing on those things. You would be blown away by the number of businesses I've worked with that are like, I don't know what's happening. I'm selling more than I've ever sold, and I'm losing money. And you'll be like, well, what are you selling it for? Well, I'm selling it for, $4. And you're like, well, what's that based on? Is that based on your cost? Well, no, my competitor sells them for $4, so I got to match his price or I'm going to be screwed. And then you do this and you go, they cost you $4.40 a piece. Of course, if you sell more, you're going to lose more money. You're losing 40 cents every time you sell one. So if you double your sales, you'll double your losses, right? So we've got to work on a marketing plan. Either we've got to try to cut your costs, or we've got to be able to sell that yours at a premium to your competitors, right? Maybe we have to, is it better quality? What is it? What is it? And you have to help them with that process. I would rather sell fewer at a higher price than lose money on every sale. And so that's where this all kind of comes down to, is you have to understand your costs so that you can set prices and you can make other business decisions. Okay. All right. So that cost right there was just for the one process, the one department. Now we have to go to the cutting department and figure out the costs involved there. Okay. The other thing is by figuring out your costs per equivalent unit in each department, is you can start to try to figure out things like, where am I less efficient or where am I more efficient? Why is this part costing me so much? Is it too labor intensive? Is there some way I can automate this? That's how all this gets used, right? All right, so now it's the same process. We have units to account for and units accounted for. And units to account for always begins with the beginning plus any transferred in. Remember, in the first process, it was beginning plus any begun in the process, because that was the first process. Here we transferred in from the previous process, which was, what was it, assembly? What did they call it? I don't know, it was where they glued it on there, right? And then the units accounted for is always completed and transferred out plus any ending work in process. Step 2, we figure out our equivalent units of production. Again, it will give you the information you need in the problem. It will say, in this case, it's 100% done with relation to direct materials, and it is, you know, I don't know, whatever percentage that is. It'll give you the information you need to calculate the equivalent units, and we'll always give it to you as like it's a percentage done with relation to direct materials or with relation to conversion costs. Okay. I guess that would be 30%, right? It would say 30% times 7,000 is 2,100. So now, actually, check it out. So their ending work in process is 0% complete as it relates to direct materials. Do you see that? So they have it. Do you remember what this process was? It was the cutting department, right? Where they cut it into pieces and then put it in a box. And the only direct material was the box. And so if you think about that logically, the last thing you do is box it. So apparently the way their process works here is they're 30% done with conversion, meaning 30% of them have been cut or whatever, but none of them have been boxed yet because the box cost is the direct material cost, and that will go in at the end. In real life, you will be really familiar with the production process of what you're working for. If you worked at FMI and were a cost accountant in the copper production area, you would understand their processes. In fact, that's the big move in business. Is it used to be like the accountant was housed in Phoenix, and and then the workers worked here at the mine, and the accountant just did the math. And they've really gone away from those processes. And now they want the cost accountants to work on site, have an office usually right next to the plant manager, because they want the accountant involved in the process, understanding the process. Because the accountant is the one that helps the manager make decisions to make the process more efficient and more profitable. Okay, and so like I said, the vast majority of accountants that have come through our program end up working in some sort of cost accounting field. Only a handful of them are like CPAs that are doing people's taxes and stuff like that. Because if you think about it, that's where most of the jobs are. Helping improve the process. All right, so in this case, the units accounted for, they have 38,000 transferred in, plus 7,000 that are still in process. Of those 38,000, none of them have had the direct materials added to them yet, and 30% of them have had the conversion cost applied to them. That's the direct labor and the manufacturing overhead. So once we have those equivalent units of production, I don't know why they went to another slide. I'm going to skip it and go here, maybe just to show you the detail. But once we have those equivalent units of production here, then we can take the costs. Again, in a problem, these will be given to you, okay? And we can say it was $198,000 put into the units transferred in. It was 45,000 units, so 198,000 divided by 45,000 gives us $4.40 cost per unit. If you remember, that was from the previous department, right? 440. Then the direct materials, again, we take the total cost divided by the number of units, and that gives us a cost per equivalent unit. Conversion cost, same thing, total cost divided by the total units. And now that's our total cost for the product, $5.30. So that's the cost of an equivalent unit through completion. $4.40 in the first department, plus another 90 cents in this department. Yeah. Mm-hmm. Well, and yeah, like these numbers, yeah. And so this one was actually given to us previously in the first process. But these direct materials and conversion costs added, yeah, they have to give them to us. There's nowhere else it would come from. Again, in real life, what you do is you'd have either a ledger where you said, these are all the costs we put into it, this is the total cost, or more likely you'd have a computer, right? As the buyers purchase the raw materials, that would enter into the ledger, and you'd just be able to look at what the total costs are. Then once you have your equivalent cost per unit, you have the cost accounted for. So again, now you just multiply that amount times the number of units. So, so let's see, we have 38,000 units transferred in times $4.40 gives us the total cost of those units. 7,000 still in process times the $4.40 gives us the cost of the units still in production. And you add them all up and they have to balance. Okay. So again, this is it seems a little bit confusing because you haven't done it yet, but honestly, it's just making sure your to account for equals up to your accounted for, and your equivalent units of production is the most confusing part, but all that information is going to be given to you, and all you do is multiply the percent that's done times the total number of units. Okay, so once you do one, I don't think it'll be too hard for you. Okay. So the other thing you have to think about is, in addition to being able to do this report, you have to be able to do journal entries. Remember, like way back at the beginning of Accounting 1, where I was like, this is a part that's like, you've got to get down now because it will haunt you through the rest of it if you can't do journal entries, if you can't do debits and credits. So still, we're doing them, right? And so here's the transactions that are going to happen through this process. So the company purchases raw materials on account. So your raw materials inventory goes up, there's your debit. Your accounts payable goes up, there's your credit. I guess this could look, they could also purchase the inventories with cash, right? And then your raw materials would go up and your cash would go down. That'd be two ways to do that. During July, direct materials were assigned to the two production departments, 140,000 to assembly, 19,000 to the cutting department. So this is where you're going to get these total costs from. It would tell you this, right? And 2,000 in indirect materials were accumulated in manufacturing overhead. So we debit work in process inventory, assembly, debit work in process inventory, cutting, debit manufacturing overhead, and then credit raw materials inventory. That's the flow from raw materials into work in process. Labor costs incurred during the month, they incurred 20,000 in direct labor costs in the assembly department, 3,840 direct labor costs in the cutting department, plus 1,500 in direct labor costs. So again, we debit work in process inventory assembly, work in process inventory cutting, manufacturing overhead, and then we credit wages payable. Unless, of course, we paid all those wages in cash, then we'd credit cash. But they're always going to do it as wages payable for the class. So you see how this works? You have raw materials, you move them into work in process in one department, then you add in the labor costs and the overhead for that department, then you move them into the next department, you add in the labor costs, the overhead, and any other materials that you're adding, and that's how the journal entries work too, okay? Let's see, additional manufacturing costs incurred. In addition to the indirect materials and indirect labor costs, they incurred $35,000 in machinery depreciation, $20,000 in indirect costs that were paid in cash, which included rent and utilities. So manufacturing overhead goes up by $35,000, accumulated depreciation $35,000. Manufacturing overhead $20,000, cash goes down $20,000. Transaction 5, Puzzle Me used a predetermined overhead allocation rate to allocate indirect costs to the departments. 48,000 to assembly, 11,000 to cutting. So at that point, we're going to debit work in process assembly, work in process cutting, and then we're going to credit manufacturing overhead. So we still have that going on here, right? Where all along the way, as we actually incur overhead costs, we're debiting manufacturing overhead. And then when we're allocating it using our predetermined overhead, right, we're crediting it. And in the end, we're either over or under allocated and have to do that adjustment at the end. So that's still part of this process. At the end of July, when the production cost report for the assembly department is prepared, they assign $176,000 to the 40,000 units transferred from the assembly department to the cutting department. So our work in process inventory cutting goes up. Work in process inventory assembly goes down. We're transferring those units that are fully completed in one production department to the next department, okay? At the end of July, when production cost report for cutting department is prepared, they assigned 201,400 to the 38,000 units transferred from cutting department to finished goods inventory. So finished goods inventory goes up 201,400. Work in process inventory cutting goes down by 201,400. During July, they sold 35,000 puzzles. That's a lot of puzzles. Anybody here a puzzle person? You like to do puzzles? Oh, nobody wants to admit it? Okay, I see a couple. My wife's a puzzle person, but I get bored with them very fast. Do you separate out all the edge pieces first, or do you just go for it? Okay. Some people just go for it, man. You enjoy doing puzzles? Do you actively seek out puzzles? My wife does a phone puzzle, and I'm like, I'm like a digital. How is that satisfying? It doesn't, because for me, I think the only thing satisfying about doing a puzzle is like the tactile, like of touching the pieces and moving them around. But I'm a touchy person too. And you're like, all right. So they sold 35,000 puzzles. We've already determined from production cost report for the cutting department that the cost of goods manufactured was $5.30 per puzzle. Therefore, the cost of 35,000 puzzles is $185,500. The puzzles were sold on account for $8 each. So we're going to, just like any sale, always, there's going to be two entries, right? There's going to be the retail, what we sold it for entry, which is always going to be accounts receivable or cash, depending on how we sold them. This said on account, so accounts receivable, and then sales revenue. That's the $8 times 35,000. So they sold them for 280,000. And then there's going to be the costs entry, which is always cost of goods sold on the debit side and finished goods inventory, because they're moving out of finished goods inventory to the customer, right? Which was the 185,500, which was 35,000 times our cost of 530 each. Okay. Now, lest you say, man, they're making bank on those puzzles, remember, this is just going to give us our gross profit, right? They're still going to have all their selling and administrative expenses to cover. People always think business owners are rich because they look at the gross line and they're like, what? You just made like $100,000. And then you're like, yeah, but we have to still pay the salespeople and we have to pay to ship them and advertising and all of those costs. Everybody's like, I'm quitting my job and going into the puzzle industry. I don't know. And then our last transaction is going to be to adjust our manufacturing overhead. So our actual manufacturing overhead costs incurred, that would be the debit side of our manufacturing overhead account, was 58,500. And then we allocated 59,000. So we're going to debit manufacturing overhead 500, and we're going to credit cost of goods sold. Remember that that last transaction is always to kind of, because this manufacturing overhead account is just this sort of accumulation account we're using during the period. In the end, we're always going to close it to cost of goods sold at the end of the period, okay, to a real expense. In this case, if cost of goods sold is an expense, what's the normal balance of an expense account? A debit, thank you. And so in this case, we're actually crediting cost of goods sold, which means we're reducing our cost of goods sold because of the allocation, right? It can either increase the expense or decrease the expense, just depending on if you're over or under allocated. It doesn't matter much. You can see actually, if their estimate was 59,000 and they got within $500 of it, then their estimating is pretty darn good, right? That's within 1%. That's pretty good estimating. So good on Puzzle Me. They're so good at what they do. And that's it. So that's it for this chapter. I think you're going to do great because you're smart and you're capable and people love you. Okay? So have a great day, or get working on your homework, whichever you think is the best thing to do with the rest of your time. No, those two things are mutually exclusive. You can either have a great day or work on your homework.